everyone. It's great to be here. I say finally here because I've flown 31 hours to be with you. So I'm from Australia, from Sydney, and yes, it is a very long way. So it's my first time in Florida, and I know that in Australia you all think we have the scariest animals on the planet, but I think Florida's got a few as well. It's really great to be here, and today I hope you're educated. So this is not just about me talking about payments, the history of payments and where payments are going. I hope that there are a few little wisdom pieces that you'll actually get from my presentation today. What I do want to say is that first and foremost, I'm a retailer. Let me just see if I can click this through. What am I doing? Oh, here we go. Can someone just help me with this? Is it on? Thanks. So first and foremost, I'm a retailer. So I put my retail hat on, and whether in this room you're a retailer or whether you're an SI, thanks. Whether you're a retailer or whether you're an SI, the retail fairy tale is what we all want. And a very wise person told me the retail fairy tale, or it's actually the business fairy tale. And I think that if you get one thing from today, it's just the fairy tale, okay? If there's nothing else, just take the fairy tale home. So what does every retailer in the world want? They want 3 wishes granted, and it's pretty simple. They want to increase revenue, loyalty, and be loved and adored, and they want to win. They also want to make sure that they invest the minimal amount of time and lowest cost effort in everything that they do. And so in terms of, you know, at you as SIs and any solution that you provide to a retailer, it has to actually have this focus, which is it has to be something that's going to increase revenue, it has to be something that's easy to do, and it has to be something that will allow them to be the winner and not cost them a fortune. And I think in payments, this is one of the most interesting areas of enabling a retailer to do this. I think the other thing that is super interesting is that for me, product comes first. If you have product that sells, you have product that sells. If you don't have product that sells, nothing's going to magically make it sell. And I must say that when I worked with, I don't know why that's not clicking on. When I worked with eBay, one of the things that we would always say to our sellers is, if it's either good product and it'll sell, if it's not good product, it's not going to sell. Are you sure this is charged? Because I'm pressing this and it's not. Okay. Let's move to the next one. So let's just go for some fun facts in payments. And it's, as I said, it's great to be here in Florida. The top mobile payment platform in the world is, of course, WeChat Pay, which is a lot closer to where I live than where you are. And certainly there's a lot of traction in terms of WeChat and WeChat Pay. We know that there is a big shift to mobile. And, you know, in terms of mobile payments, China is one of the biggest drivers of mobile payments, and that Americans favour PayPal over any other digital wallet. And I'm sure everyone has had this experience of going to a website, finding the products you want, going to checkout, and not seeing PayPal. And the first thing that you do is open up another browser and you go onto Trustpilot, and you find out who that brand is and whether you're actually going to get your goods. And that is a fact. And so I must say that, you know, PayPal obviously in this market, and I actually used to work with PayPal and eBay, and I must say it's an amazing payment method. So in this market, PayPal does take the cake, 89%. And obviously with Venmo now as well, it's a really easy way to be able to offer credit cards and their wallet. So let's talk about the growth of alternative payment methods, and is it the death of the credit card in e-commerce? And checkouts are getting crowded. They really are, and we're seeing a lot of payment methods turning up in checkout. And the question is there method to the madness? So let me just give you some experiences of mine. So let's just go way back. Obviously, the personal check. I was doing some fact checking this morning, and still in sort of this sort of 2020 time period, there were still like 18 billion checks being written in the US. It's quite extraordinary that something that really is quite a dangerous thing, as far as I'm concerned, is the check, was still being written in the US in 2020 and still continues today. Obviously, credit cards started in the 1960s. We had Pizza Hut introducing their first widely used ordering platform at a similar time, and then Coca-Cola had their short-lived pay by text. Of course, PayPal, 1998. If you haven't read the book 0 to 1, pick it up. It is a brilliant book. It's not only brilliant for the fact that it tells the PayPal story, it's brilliant because there are things in there that will give you an aha moment about your own business. So I do suggest you pick it up. But obviously, PayPal is one of the pioneers in APMs. And of course, Bitcoin and crypto. So in terms of payment methods now, there are just so many of them, and I want to unpack a little bit of that today to see how you can help your retailers to unpack it as well, to get what they want. So this is where it all started, and back in the 1980s, my aunt was robbed in her store in Sydney, and she picked up this thing and she threw it at the robber and they ran out of the store. Now, you can't do that today, but these things are the things that most of you in the room should remember, and apparently they're really good for getting rid of robbers as well. So in terms of credit cards, where I come from, there are, and our population in Australia, 26 million, there are 13 million credit cards in Australia. That was in November 2022, with a national debt of 18 billion. In the US, you guys take the cake, I'm sorry. Everything's bigger and better over here, including the burgers over there at the Hard Rock. Don't go there, they're 2,000 calories. That is like one day's intake for us in Australia. But in terms of Americans, you have 1.1 billion in credit on credit cards, and 83% of Americans own at least one credit card. And obviously, you're reaching a bit of a record debt in the fourth quarter of 2022 in terms of credit card debt, which is quite extraordinary. So who is using good old cash? There is still a bit of cash being used in emerging markets, but obviously with the pandemic, this also changed quite considerably. So you'll see countries like China, in 2010 was still like a 99% cash. By 2020, they're down to 41%. And a few different trends there. So if you work globally, these are the things that you have to be aware of. At the beginning of the pandemic, I was asked to do a project for one of my clients in the Philippines, and it was a bit like this. They had 95 brands, 780 stores, and no online for those stores, and a pandemic was coming. In a period of about 6 months, we launched probably what is the biggest Magento website in terms of SKUs in that country. But we had one thing that we needed to get over: cash on delivery. You know, the Philippines is still very much a cash on delivery market, and so we had to educate our consumers to actually go to PayPal and to other Gcash and other credit types. So what are APMs? Well, they're buy now, pay later. They are digital wallets, cryptocurrencies, pay with points, pay by account, direct exchanges, and of course PayPal, etc. So there are so many different APMs now, and as you know, consumers want to pay by APM. Why do they want to pay by APM? They are worried about their data. They're worried about their security. They don't have credit cards. They've seen their parents sit and have multiple credit cards and live in spiraling debt. And that has made it really, really difficult for them to embrace this thing called the credit card. So they are going to this, and unless we as retailers embrace this, we're going to be in a little bit of trouble. So this is the way that it has changed in terms of the way we pay, and this is just a small snapshot of what's going on in the world. And the problem is that there are so many of them, and they are by currency and by country, and if you're a cross-border trader, that creates quite a few nightmares. So the way customers pay has become just as important as the product offering, and in many cases it's become more important. So you can have great product, and I always use this example, okay? I'm a consumer and I decide that I want to buy some Adidas sneakers. So I go and I put them in my shopping cart and I get to the end and I realize the payment method that I want to pay with is not there. And I think, you know what, I'm going to just abandon that cart and I'm going to go to the retailer that has the payment method that I feel super comfortable with. And this happens all the time, and it's really, really difficult for retailers and for e-commerce retailers to be able to offer the right payment methods to make sure that they do get that conversion, but it is becoming more and more important. So I always say product first, but the second thing is obviously the user experience and how they pay. So what is the future of this thing called pay in installments? And we have had some insights into this just with the earlier presentations, but we are looking at a pretty high growth rate of what's happening in buy now, pay later and pay in installments, and some of those stats that were just being touted around in that presentation earlier is pretty staggering. The fact is consumers do love it. They do. They love it. They spend more. They trust it. In terms of where it's heading, we're looking at $1 trillion in 2025. And in APAC, where I'm from, I like to say we're the home of buy now, pay later, because we started it, maybe. But we are at, 361 billion already in APAC, which is pretty outstanding. So in 56% of Americans had already used BNPL in 2021. And regulation tightening and responsible lending is coming, and that is a good thing. Okay, we want to have our consumers protected, and I really like the fact that there is regulation coming. And the requirement for a consumer to pay a fee is probably inevitable, and they're going to have to pay for the pleasure for being able to pay in installments, because the model is probably not sustainable for many of the payment providers unless there is some sort of fee or making sure that consumers absolutely pay on time. And buy now, pay later, APMs, etc., are a revenue driver. There is no doubt in my mind that they are a real revenue driver, so something that you need to absolutely pay attention to. So let's just have a look at this. This is the massive market opportunity that we're seeing in APMs and in buy now, pay later, and this is where it's heading. So unless we embrace it, and unless we work out how to do it and how to deliver it, i.e. deliver the first wish of the fairy tale, we're going to be in trouble as SIs and as retailers. The actual stats are trending in this way, and it's not going away. There is a totally different consumer that is heading through the doors, and we need to be able to deal with them. In terms of what BNPL looks like as a key driver in retail sales, it's absolutely evident as well. So let's see where this actually heads. In terms of debit and credit cards, now my company is a global partner with MasterCard, so I am all for the debit and the credit card, but it's changing. It really is changing. So the global debit card market is growing, okay? So 4%, I think I've got this stat, but 4% of debit card transactions in the last quarter of last year went to buy now, pay later. How interesting, right? So there's a real shift into consumers who do not own a credit card, and they are using their debit cards to attach to their PayPal accounts, their BNPL accounts, etc. So in terms of the actual market, in terms of debit cards, it is absolutely growing, and you need to pay attention to it. There are the numbers. And according to the Financial Times, there was a 35% reduction in cash payments. And therefore, in terms of where we're going in digital, it's going to drive that debit card market. There is no doubt about it. Now, that could have been a lot to do with the pandemic and the end of the pandemic and the fact that no one actually wanted to touch anyone, and then apparently cash became the thing that you touched and then they touched, and then maybe we'd get COVID. But that is absolutely a trend, and it's staying. And I must say that here I am in the US, and I think I've probably only touched 2 notes since I've been here, and that's a week so far. And as I said, MasterCard is reporting that 4% of debit card transactions were attached to buy now, pay later purchases in Australia in the last quarter. So let's look at checkout flows, because this is where it gets really interesting, because obviously the consumer is going from your environment to a payment environment and back. And these checkout flows are quite seamless and frictionless, and consumers are actually getting really used to it, right? In the past, we would go, hey, that's ridiculous. You want to have it all on that page. You want to be able to get them to check out in a couple of clicks. This is ridiculous. But consumers actually are fine with it. And obviously what happens on the other side in terms of the payment method and what they need to go through in order to authorize that payment is really important. But I'm going to show you some stuff now that I think you'll find really super interesting. In terms of the shifting wallets, we know that credit cards are in decline and that millennials are basically not interested in credit cards. And they don't even list credit cards in their top 3 options for payments. In terms of consumers, 60% of consumers under 65 consider credit cards too risky. And obviously where I'm from in the Asia Pacific market, there is a real downturn and digital payments is becoming really, really popular. Why is it shrinking? Because it's expensive, it's structurally risky, there are lending issues, high interest rates, and obviously spending limits. And MasterCard and Visa are expanding their BNPL. They're expanding their offering. And even with some of the banks that I'm working with in Europe, BNP Paribas, Santander, these guys are all offering pay in installments. They're banking products and they're recognizing that their customers are shifting to this. I want to speed up my presentation a little bit because I want you to have some opportunity for questions. But the most important thing is consumers can make purchases that they can't normally reach when they use APMs. But this is why choice is so important. In terms of the data that we're actually seeing, consumers are looking at least 3 payment methods in every transaction that they do before they make a decision. And we have some incredible data on exactly what this looks like. So City Beach is an Australian retailer. They had 2 BNPLs in their New Zealand market, and they switched on a bunch more, and they increased their sales by 40%. Just like that, switched it on 40% by increasing their payment methods. And they had a steady AOV. In Australia, very popular obviously in installments, they had 2. They went to 7. Oh my God, 7 payment methods in one checkout. How crazy. A 21% increase in sales. Why is that? Because the payment method drives loyalty and engagement. And so whilst it seems totally crazy that you would ever want to do that, basically that is what you need to do in order to get that fairy tale. So this is a bit of a crowded checkout, but this is where it's headed. And as was mentioned in the earlier presentation, personalization is going to be really important as well. And another one, just in relation to the data around BNPL. So Cotton On, I don't know if you know the Cotton On group. I think they have stores in the US, but they're also an Australian retailer. 30% of customers are initiating more than 1 BNPL in Australia with every transaction, and 10% we're looking at 3 to 4. So they are exploring in checkout. So you need to have choice. So loyalty to the payment brand has become key to customer acquisition. And businesses can obviously access a wider customer base, and I think PayPal has really proven this, and the others are proving it as well. Payment drives loyalty to the transaction. The way that consumers pay is something that retailers need to support the preferred way. And payment types like PayPal offer security to the buyer and buyer protection. So my example earlier was you go onto a website, you don't see PayPal, you type in Trustpilot and you make sure that these guys actually exist. And so the change continues. Digital wallets, digital payments in Europe are all up. Same as Asia, same as the US. Cash on delivery is still happening in the Middle East and Africa, but it is changing, and I'm doing some work there at the moment just on that. And all regions are increasing their demand for alternative payment methods. So the customers are clear. We need to change. So the future, personalized checkouts. We discussed this before, using AI and ML to personalize a checkout to make sure that it's individual for every customer. Offering more choice to drive more GMV. Regulation, it's coming, it's a good thing. Cross-border payments acceptance. It's going to be easier for cross-border payments acceptance. And SMBs are going to reduce their marketing costs because they're going to be able to team up with payment providers that can drive consumers to their website. And I think that's one of the most exciting things that is happening. And more inline credit options are going to be available. So I say let's do this. I think it's pretty exciting to see what the future brings. And just remember the retail fairy tale. It's pretty simple. It's all that retailers want. And I must say that even the way that I'm presenting now, I'm just keeping it much simpler because it's only about the three things. Is it going to drive revenue? How easy is this to do? And what's the cost? I would love to connect with you, so please look me up on LinkedIn. I am here at the conference for a few more hours. Unfortunately, we have to fly back to New York this afternoon, but it's been great being able to present to you all and come to Florida. And, you know, I would love to have a chat to anyone that would like to have a chat to me after the session. And feel free to ask questions now. So thank you very much. Any questions? Hey. Thank you.
Natasha, welcome to US, and thank you so much. This was a fabulous presentation, and I just feel so much smarter after listening to everything. Wanted to ask you, when you say APMs are extremely popular with the customer base that you're servicing, are you seeing a preference? Is it buy now, pay later that is showing up as a popular APM, or is it the debit cards, or are there any trends that you're seeing?
Yeah.
And certainly I think you're superbly smart about like the trends in the North American region versus everything else that's happening in the world, and it's just two completely different ecosystems that show up.
And look, I think it's very different all over the world. So we're in 60 countries, and what we see is, for example, in Asia, a huge shift to digital wallets. So whilst you've got a Tome and some great buy now, pay laters in that region, digital wallets are really key. They just love the wallet. In the US, adoption is about to happen rapidly because if I think about Shop Talk last year, we went to Shop Talk last year and we were talking to retailers at Shop Talk, and they're like, why do I need this thing called pay in installments? And we're like, oh my God, we're from Australia. Are you crazy? You know, you need this thing. But I think the maturity is coming. It's going to be how it's trusted is going to be the most important thing. So, for example, the PayPal pay in installments, it's actually in my technology. We actually have PayPal and PayPal installments in our tech. And it's very popular because it's a trusted brand. So what's going to happen is that the choice of which payment method you put in the checkout is going to be equally as important as actually offering it. So pay in installments is absolutely something that consumers want. It's how they get it, whether it's through PayPal, through one of the what I call unregulated credit providers, or maybe even through their credit card. But it's just a word of warning with the credit card. You don't pay off your credit card, you still pay 21% interest on that installment payment. So it's a little bit of a dodge, if you ask me, because it's not a interest-free payment. It's only interest-free if you pay off your card, right? So it's just like a way of sort of, putting those installments on your card in increments. It doesn't sound very appealing to me, but it's going to be interesting to see how that plays out. But I hope that answered your question. It's super different in every market. And that's why I think looking at the market, looking at the payment methods that are available is really, really key. Thank you.
Hi, and thank you for this presentation. It was great.
Thanks.
Based on all of your data, what do you say is a percentage of errors and declined payments, and how exactly do you deal with it? So
Sorry, what were you
personally use this a lot.
Was it errors? Was that?
Like, not errors, declined payments, customers not.
Decline, yeah.
Yeah, I would say if the customer changes their card, if they don't have the balance at the moment, or simply they just stopped paying, cancel. I'm going to say, my best example, I'm going to go ahead and I'm going to purchase a flight to Thailand, and I'm going to pay with my card, and that you have my bank account information, but I say, you know what, I'm going to cancel that card, my debit card.
Yeah.
What happens then?
Yeah. Okay, so this is super interesting. We actually look at all the acceptance rates across the whole journey of all the payment methods that we have. And buy now, pay later is super interesting in seeing what happens with each transaction. And that's why we see this, as you saw on that example before, customer looks at this one, comes out, looks at that one, goes out. The reason why they're doing that is because there are times where they are declined. Now, the decline is not necessarily because they're a risk. The decline is maybe because the lender is not lending to that amount today. And we see things like with some of the smaller buy now, pay laters, a drop off at 9 p.m. at night. You can tell that the lender has got a algorithm there that says, I'm only lending this amount of money today and we're at our limit. So sorry, any transaction after this is actually just not going to be approved. It may not be declined, it might just time out and then consumer goes in and chooses something else. There is obviously a risk for the BNPLs if you attach a card and then change it, it expires, etc. But in terms of the way that they manage it, when you actually go to make that transaction, it will look at the installment period and it will say, hey, really sorry, we can't offer you this today because you need to update your card in order to be able to have this transaction. So there's a whole lot of smarts that the BNPLs have actually built in order to mitigate those risks. In terms of the overall fraud though, I know that it is growing, but it is actually quite minuscule in the scheme of things in terms of how many people are not paying back. And so, you know, I didn't have stats on that today on purpose because it is sort of different per country. You've got the likes of Forta and a lot of the security, cyber security businesses who are basically looking at the algorithms of consumers that are actually, you know, fraudulent within this space, and they are being blocked. So to answer the question, we see on average only 86% of transactions that are initiated in buy now, pay later actually succeed and go through, and that's with a really established buy now, pay later. Okay, so that would be Afterpay Australia. If you look at maybe ClearPay in the UK, which is the Afterpay brand in the UK, only 54% we're seeing on average actually goes through, which is super interesting. Klarna in Europe, super high. Klarna in Australia, lower. It just depends on the market. But the algorithms and the smarts for the BNPLs are getting better to mitigate the risk. But as retailers, no risk. You get paid the next day. That's it. So that's good. Thank you.
Thank you, everyone. Are there any more questions? We may be able to sneak one more in. Thanks so much, Natasha.
Such a pleasure. Thank you.
We appreciate it.